Welcome into another edition of Market Takes. We are looking out at all the things that you need to be looking out for this week, all the big things coming up. And it's not just economic data this week. We've got a couple big things coming up this week that you're going to want to look out for that aren't just releases from the government or statistical agencies. First of all, starting at 3 a.m. Tuesday morning, that is tomorrow, you've got the start of Amazon Prime Day. I'm going to tell you why you're going to want to look out for Amazon Prime Day and why that could move markets and why that'll be important for the economy in just a minute. Also, of course, it is CPI week. We got the Consumer Price Index coming out on Wednesday morning. We'll be right here on Market Takes breaking all that down. And then on Friday, we have the start of earnings season, the unofficial start of big earnings season with those big banks. You've got Citigroup, JPMorgan, Wells Fargo, all coming out on Friday. We're going to dive into why that'll be important for this week. So first things first, let's start with Amazon Prime Day. That kicks off tomorrow morning, 3 a.m. It's going to be July 11th and 12th. What it is, Amazon Prime Day is just a big day where Amazon offers a lot of big discounts for its Prime members. They pay about $15 a month. And if you are a member of the Prime group, if you subscribe to Amazon Prime, you get big discounts on Amazon. Really a lot of tech items, a lot of things that have really, been marked down significantly, and that's designed to bump up those sales. This has been a really big event. I don't want to say a big day because over the past few years, Amazon has stretched Prime Day into a couple days as they'll be doing this year, but over $10 billion in sales, so say, Consumer Reports about Amazon Prime Day over the last couple times. Now, we've got this year coming up. A lot of other retailers have actually joined into this, and so this has become not just a thing about Amazon, but you've got Target launching Target Circle members having their Target Circle Day. That was starting July 9th. You've also had in previous years, Walmart has joined in with their Walmart Plus program, so you've got some of the biggest retailers all across the board joining in on this big sales day. And this makes this not just about Amazon, but about consumer sales, about online retail sales, about the pickup or an attempt to really jumpstart and jolt higher some of those sales that have been consistently kind of lower in the summer months. So this started back in 2015 and historically had been the week after July 4th, but in 2020, Prime Day was moved to October, and in 2021, it was also in June and October. Now it's back to being in July, and we are going to see just how much timing matters and how much this can really jolt up those retail sales of goods, which have been lagging. I want to put something up here on your screen right now, and that is just the chart of U.S. retail sales. This is the change that we have seen year over year. Going back now, if you look in 2023, the start of 2023 in January, and then coming into what we're seeing last month, you've just seen a pretty consistent decline in terms of the overall percentage change in retail sales. Those sales have been coming down pretty consistently, going back all the way to about mid-2022. Now, we have seen inflation has come down as well, but we know really big price increases were jolting those numbers higher, and now we have seen a declining number, especially when you break out the good side of those retail sales numbers. Those numbers have been coming down, and that chart really just illustrating the slowdown that we have seen in retail sales. And that's why Amazon Prime Day coming up here in July could be a big deal. Again, you've also got Target participating, you'll likely have Walmart participating, and we know consumers have been spending a lot more on services, going out to bars, restaurants, barbers, things like that, rather than goods, things that they purchase on Amazon.com or Walmart or any of those. So this will be a good test of the economy. Is the goods sector, can the goods sector really pick up and repeat some of those big numbers that we had seen for Amazon Prime Day in the past? Now, what we also know about consumers have been loading up credit cards. They haven't really been buying with cash or buying with debit cards, using that money straight from their account. They've been borrowing money, essentially, taking out those personal loans. Consumer credit card debt is at a record high. And we also see that while consumer credit card rates are at record highs. So we know folks are paying a lot more to borrow that money from the banks in the form of credit cards. Will that continue, and will they keep doing that to splurge on something like Prime Day? This isn't a thing where we've seen consumers really switching more to necessities, more to things like groceries, more to things like gas, and spending their money there rather than on those big purchases from Amazon and other retailers. Are they going to continue to do that for something like sales with Amazon? And we'll see if that continues. So another big test of the economy. Can this trend we've seen of folks loading up those credit cards and spending that money continue for something, it's not really about needs. This is more about wants, about tech items, about VR headsets and things like that, speakers and all those kind of smart devices. Will that motivate folks to keep spending? This could also be a really interesting test for the health of the economy. We will see that consumer credit data. That's out today at 3 o'clock, but it is for May, so it's a couple months delayed, but that is going to be a good test for the overall health of the economy. Do consumers keep spending as they have? We have seen retail sales, as we just showed you on the screen, come down for a bit. One caveat to this Amazon Prime Day, because again, this could move stocks. If it breaks the pattern that we have seen of lower retail sales, of lower goods sales, that could really push stocks higher. If the numbers are disappointing, that could move stocks lower. And this could be something that moves the market, so you're going to want to look out for that. One caveat, like I said, is that there isn't really an official metric. Amazon doesn't put out their numbers. Last year, for example, rather than disclose the total number of sales, they said Amazon Prime members saved $1.7 billion more than any other Prime Day. Well, that doesn't tell us how much they spent, right? It doesn't tell us how much actual revenue was drawn. It doesn't tell us how much profit was made. It just kind of tells us, okay, well, they saved a lot of money. Great. Independent analysts, though, like Digital Commerce 360 and Adobe, they provide some estimates and some info and some intel, so we can get an idea for what happened. So you'll want to look out for those reports, and those could move markets. Second thing we want to talk about this week is CPI inflation data. I want to throw up here on your screen just the trend that we have seen from CPI. Now, what you see there is a consistent decline in the year-over-year inflation rate. We have seen 11 straight months of declining CPI, of declining inflation, and that is definitely what the Fed wants to see. So that chart up there on your screen illustrating the trend that we have seen for a while, going back about a year in CPI. And, we have seen just a decline in inflation. That's a good thing. Those prices have been coming down since the Fed has been acting. Now, the big question is, could we see CPI rise again? And the answer is yes. However, economists are expecting a very bullish reading for June. Economists expect to see inflation decline to 3.1% on the CPI. Now, that would be huge because it would bring CPI down much closer to the Fed's target range. A lot of folks think that the Fed would actually be okay with 3% inflation. A lot of folks think the Fed should actually be targeting 3% inflation. So if we get that 3% number, that would be really big and that would be important. Now, here's why we could see an increase in CPI. We have seen services spending continuing to rise. Even coming into this last month, the last few months, we've seen services spending pick up. Core CPI has not been declining as it had been previously. We've also seen housing prices pick up significantly lately, and that is the biggest component of CPI. Of course, the Fed's favorite metric, CPI, declined in June but did pick up in May, so we could see that kind of transfer into or translate into what we see on the CPI report. Now, the CPI report could move the market in a number of ways. Even though if we get that 3% number, that would be bullish overall for the market, could see stocks really take off, but that could push bond yields up higher as folks sell out of those bonds and say, hey, the stock market's going to start taking off. I don't want to own bonds anymore. I want to own stocks so that I can make a lot more money. Well, that could push bond yields up because, as we know, when folks sell bonds, the prices decline, the yields rise, and that could again make those more attractive and kind of create this inverse correlation between stocks and bonds, and you could actually see that hurt the stock market. So a lot of interesting things to break down on CPI. We will be right here on Market Takes, breaking that down for you on Wednesday. Last thing we want to talk about for this week is those bank earnings that we got out on Friday. I want to throw a chart here up on your screen to just show you how the stock market has been performing. As you see that light blue line up there, that's the NASDAQ. The dark blue line, that's the S&P 500. Overall, the market so far this year, really since March, has been kicked into high gear. But those bank stocks, you see the green line, the white line, the red line there on your screen, have really underperformed. And that just illustrates that bank stocks, even the big ones, even though they weren't the ones affected by what happened with those regional banks, they have really continued to underperform. Now, if we get another big blowout earnings release, from the second quarter earnings reports that we see on Friday, this could move the market significantly because bank stocks have really been one of the big underperformers for the market. If, on the other hand, bank earnings disappoint, which folks aren't really expecting right now, they expect the banks to do pretty well, But that could pull the market back down, kind of snap us maybe out of this high that we've been on, where the NASDAQ up 30% so far year to date, the S&P 500 up more than 12%, up around that 13% number. That could snap us out. Here's what to look for. With JPMorgan Chase, that is the biggest bank in the US, more than 60 million customers. It's going to tell us a lot about the US consumer. How much are consumers spending on debit versus credit cards? Are we still seeing a big pickup in credit card borrowing, or are they spending more on debit? How did JPMorgan do after the ridiculous earnings quarter they had in Q1? $12.6 billion in profits, $38.3 billion in revenue. Are they able to replicate that, keep that party going, or did things pull back in the second quarter? With Citi, how much loan loss provisions did they put away? Are banks really convinced that this soft landing can happen, or are they worried? Are they saying we got to put some money away because we're worried that people aren't going to be paying back those loans they've taken out from us? And is deal making back? We have seen a lot of the data saying no, it's not. Banks are hurting a little bit, so we'll see how Citi responds to that. Wells Fargo, they also had a big first quarter, increased profit by 30%, increased net interest income by around 45%. Are they able to replicate that? Analysts are expecting some big numbers from the stock market, and we're going to see if that can continue. So we're going to get out of here, but again, what to watch out for this week? Amazon Prime Day over the next couple days. CPI on Wednesday will be right here on Market Takes, 10 a.m. Eastern Time. Hope you'll join us, and then those big bank earnings on Friday. And listen, that's going to do it for us here on Market Takes. I am Dion Rabowen, reporter at the Wall Street Journal. We will be here Wednesday morning, 10 a.m. on doing Market Takes. Hope you'll be with us and join us when we do it next time.